Today in our Spotlight segment, we're answering your question of the month. And I've asked my colleague, Owen Boyle, Vice President of Research and Education at iCapital, to help us out. So the question we received this month is this. Allocating to alternative investments can be complicated and time-consuming, especially when targeting specific investor goals. How can it be simplified? So, Owen, thanks so much for joining me today.
Thank you, Anastasia. Thanks for having me.
All right, let's tackle this question. How can allocating to alternatives be simplified? Can it be?
It most definitely can, right? It's a major pain point for advisors and investors figuring out how to allocate, where they should be allocating, who they should be allocating to. And so the way at iCapital that we've determined to tackle this problem is through model portfolios. As you know, model portfolios have been around for a long time, but they've only been focused on traditional investments, so equities and bonds. We really view this as a way to give investors more streamlined access to private market alternatives and help them solve for goals such as, a balanced approach, focusing on growth, focusing on income, and really just sort of an interesting, I'd say, cross-section of both the financial side of what we're doing and tech.
And the simplicity part of model portfolios, I guess, comes from a couple of places. First of all, there's this large universe of managers. If you're new to alternative investments specifically, you probably don't know who all the managers are and what the track records are and what the products are. And then the other part of that is also the actual transacting part of that and, dealing with the sub-docs. So how do you simplify each one of those?
I think that our model portfolios are sort of a great crossover between the fin and the tech that iCapital does, right? So on the financial side, really leveraging iCapital's research and education team, who's out there every day meeting with various managers, underwriting strategies, helping to pick some of the best funds that are out there, utilizing various technology to come up with the ideal composition of a particular model portfolio. And then finally, also leveraging all the great tech that iCapital has in terms of making that subscription process a lot more streamlined, right? So you're maybe allocating to 4 or 5 funds, doing that sort of through a single access point, as opposed to filling out, 5 different instances of that subscription. So I think what we're trying to do is really take that burden off of advisors' plates. In the construction of these models, I like to say it's a little bit art and science. The art kind of coming in at the first step, which is determining the applicable universe, right? So you mentioned there are hundreds of different managers out there, thousands of different funds. It can be very complex and complicated. So really what we're looking for are open-ended funds that give investors quarterly liquidity, funds that are available on all major custodial platforms.
Yeah.
And then finally, funds that have 2 years of a track record so that we can sort of analyze how they've performed. And then from there, we're sort of doing more of the science, which is de-smoothing the volatility, understanding how these assets actually trade and are priced. We're also then kind of coming up with our own forward-looking capital markets assumptions. The fourth step is really around putting constraints on the portfolio, right? We want to make sure that they're adequately diversified. We want to make sure that we're not too concentrated in any one fund, in any one manager. And then finally, doing a mean variance optimization, overlaying that with a Monte Carlo simulation, making sure we're sort of removing any outliers to come up with the actual model in terms of what we see as the best combination of funds to achieve that particular objective. Generally looking for, if one fund is zigging, the other fund's zagging. And then that's really how we come up with sort of the goal model portfolio, for investors. And, you touched on the technology a little bit as well, right? Sort of utilizing iCapital's tech, particularly our multi-investor workflow tool, to sort of streamline that subscription process into a single access point.
Right, which is a big deal as well. But you mentioned the goals-based approach, and there's actually 3 different types of model portfolios today. We've launched the first one about a year ago, but there are 2 more that have either launched or about to launch. So talk to us about what are the goals-based portfolios that we offer today.
Last April, we launched our balanced model portfolio designed to maximize Sharpe ratio. So you're getting exposure to all the major private markets asset classes. So we've got 50% to private credit, 30% to private equity, 20% to real estate, giving you both capital appreciation and income. Last November, we launched our growth portfolio, which is all private equity designed to maximize capital appreciation. And then, as you alluded to, hopefully over the next few weeks, we're going to be launching our income model, which is optimized to provide the greatest yield, greatest distribution, and that's going to be all private credit exposure.
Right, that's great. Private credit exposure, but I'm sure there's a lot of different flavors within private credit as the asset class has grown.
Exactly. So I think it's going to be a nice kind of spanning the gamut of upper mid-market, core middle market, and lower middle market to really give you sort of all the flavors within the corporate private credit landscape.
Well, this is great, Owen, and we know that a lot of thought and a lot of quantitative and qualitative work goes into building some of these portfolios with those client goals in mind of growth and income and also just a balanced outcome. So thank you so much for walking us through that, and it certainly seems like this could go a long way in simplifying an allocation to alternatives. Thanks so much.
Thank you.
And we'd like to hear from you. Send us an email at yourquestion@icapitalnetwork.com and let us know what questions are at the top of mind for you and your clients. I'm Anastasia Amoroso, and thank you for joining us today on Beyond 6040. We'll see you next time.